Hello and welcome to Earnings Echo. We put together the most important information about new holdings,
Let's look immediately at the Q4 2025 headline numbers. Revenue came in at $4.9 billion.
which is a 45% increase year over year on an FX neutral basis, right?
Exactly. And net income surged to $895 million, up 50% year over year.
Those are massive growth figures, but the standout metric here really has to be the return on equity.
Yeah, ROE reached a record 33%. For some context there, they closed the year with 131 million customers.
Having added 17 million net new users in 2025 alone,
Right.
achieving a 33% ROE while maintaining that velocity of customer acquisition effectively kills the bear case regarding the trade-off between growth and profitability. The market reaction appears to be a direct validation of the business model's ability to generate cash at scale. It stripped down the operational drivers. Is this revenue surge purely a function of user volume, or is monetization improving?
It is a combination of both engagement and monetization. ARPAC, average revenue per active customer, hit $15.
So growing 27% year over year.
Yes, and the activity rate remained robust at 83%.
So they are extracting more value per user. How does the cost structure look against that rising revenue per user?
The cost to serve remained flat at $0.80 per customer. Because revenue expanded while service costs stayed stable, the efficiency ratio improved to 19.9%.
Down from 20.3% in Q3. Breaking the 20% efficiency barrier is significant for a financial institution. However, with this speed of lending expansion, we need to scrutinize asset quality. Did the NPL ratios reflect increased risk?
The data actually shows the opposite. The 15 to 90-day non-performing loan ratio dropped 20 basis points to 4.1%,
And the 90-plus day NPLs?
decreased 10 basis points to 6.6%.
Moving to the earnings call and forward guidance, CEO David Velez framed 2026 as an inflection year. That terminology usually implies a shift in capital allocation.
Right, it signals a pivot to an investment year. Management explicitly stated that strategic investments will likely exert near-term upward pressure on the efficiency ratio.
Strategic investments being specifically U.S. expansion, the deployment of the AI Newformer model, and return-to-office costs. They're essentially guiding for temporary margin compression to fund infrastructure. What is the status of the U.S. regulatory hurdles?
They filed for a national bank charter and received conditional approval in January 2026. This is a critical step for the expansion strategy.
Were there specific short-term headwinds mentioned for Q1 that you should keep an eye on?
CFO Guilherme Lago cautioned on seasonality. You should expect a seasonal uptick in NPLs in Q1 2026.
Though that is consistent with historical trends for the quarter.
Correct.
To wrap up this deep dive, summarize the long-term investment thesis based on this report.
The thesis is transitioning from a Latin American leader to a global digital banking platform.
And what is the echo for this quarter?
The key takeaway is that Nu is utilizing its $2.2 billion in excess capital and strong profitability to fund global expansion and AI infrastructure. They are asking investors to accept temporary efficiency pressure in exchange for future capacity.
And finally, the obligatory disclaimer. All content in Earnings Echo is AI-generated information and does not constitute investment advice. Investing involves risks. We assume no liability for your investment decisions. Do your own research before taking action. Numbers checked, portfolio prep. Catch you again soon.